Hello, this is Huskins, your Forex mentor. Welcome to the daily review of April 4th. What an interesting day today was, and the preview of April 5th. Oof, the non-farm payroll day, one of the biggest days in the markets. Your daily dose of events that shape the Forex markets. I'd like to begin with the thought of the day. The thought, I come across a lot of people who know the price of things, but not the value of things. Let us educate our children to be happy and not just to be rich. So when they actually grow up, they'll know the value of things and not the price. Our trade results, the Australian retail sales. I'd like to share this with you. It's very important. So, uh, you know, total concentration out here. I'd like you to follow along. This is what happened. We had the Australian retail sales much better than expected, and it spiked up and about 30 pips. Let us see where the market was pre-news. It was at 0459. So 30 pips from there would mean about 0489. Okay, almost to the pip of what I had expressed. This is the trade plan spike. For auto clickers and fast news services, use plus 0.0203 from expected. And one thing we need to be careful of is 10 pips spread or slippage from pre-release price, and take profit at 30 pips from pre-release price. So what does this mean? Why is this so important? Because I got an email from a person who said he lost money on spike trading, and what he must have done is he must have used a market order. Now, when you use a market order, you are at the mercy of the broker to fill you in at whatever is the technical best available price. So when he clicked on buy out here, he would have been filled in at the highest price, which was at 1.0489. This is the price which he would have been filled in at. While as our trade plan for the spike trading was that we'd want to be filled in within 10 pips. So we'd want to be filled in at this price or not at all. So So now why I actually wanted to share this and why is it so important is because there are a few different kinds of orders. One is a market order, which is the most dangerous order to use. Market order would mean that you fill me in at whatever price available. Now, where do the forex brokers get their price from? Depending on the kind of broker it is, but generally there are liquidity providers who provide liquidity in the market. How do they provide liquidity? They provide a bid and then they provide an ask, and they try to have the bid and the ask as tight as possible so that people trade off those bids and ask, and they keep the spread as their earnings. What happens during news times is that liquidity gets sucked dry, and there are certain times when nobody is quoting anything in the market. Now, I have made a lot of money providing liquidity when no one else is willing to provide liquidity. What I do is I provide liquidity. That means I provide a sell order 100 pips from the pre-release price. So if the pre-release price was 1.0459, in my example, I'd provide liquidity at 1.0559, close to about out here. So what can technically happen when nobody else is quoting any price between this price and this price? a person who clicks on a market buy can technically be filled in at my price, and I would immediately go at a profit when the liquidity comes back at such a the difference between my fill price and the price where the new liquidity comes into the market. Now, that is why the person who actually lost money in yesterday's trade would and definitely would have used a market order. I'd like to reiterate the different kinds of orders available. There's a market order. Number one, you don't use that for spike trading. Number two, you use market order with spike control. So I'll pull up the this is a demo account, okay, which I created, and let's look at trade settings. Okay, now when you have one click, okay, and then there is a market order at market or market range. Now there is a market range, and if I say market range of, let's say, 10 pips, that means that you fill me within 10 pips or don't fill me at all. That is what the market range is, and the order type is immediate or cancel. That means it will fill in the order or it will cancel it. Or there is a fill or kill. That means that it will fill in the complete order or it will cancel it. Now, this one does not have another market type, order type, but another order type can be is that you, if there is not a price available, then provide a limit order at that price. So in this particular case, let me pull up the Australian chart again. In case that kind of an order type was available, it would try to fill in within this 10 pips, and if no liquidity was available within this 10 pips, it would place a buy order, limit order at this price, and we could set it up for seconds, let's say 5 seconds, 10 seconds, or we could put it for 60 seconds, basically a minute, so that in case the market does decide to fill you in, because the market's moving really fast, and you anybody wanting to get out of the position could could get filled in out here in case nobody else is providing liquidity in the market. So the entire point of this story is that do not trade on a naked market order. So let me go back to our retail sales. Spike, there was a potential of 20 pips. I will register that as 0 pips, though there are people in the group who with FXCM made about 7 to 8 pips. But just to be fair, I'm gonna mark that as 0. Now we also had a scalp. The maximum amount of pips you would have been able to make on the scalp is about 8 pips, and it's nothing which I'm proud of. So I'm gonna mark that as break even, because you could have either taken those 7 pips or you would have gone at a little bit of a loss. Let's see how you would have gone ahead and traded this. When you get an order, you would want to be filled in from a little bit lower than the close price out here, or this high out here. So you get filled in out here, and from, let's say you get filled in at 7677, and then the market goes up to 85-ish, and that's about it. And even if it you do not, you'd be long time before the market does anything different, right? So the scalp trade will be a break-even trade, and since I did not have exact entries and exit criteria. So I'm not. I'm going to change the way that trade plan is structured so that you have an exact idea on how could one go about scalping it. And then we did not have a post-trade, direction because the event mentioned in our trade plan did not materialize. Okay, now let's look at the most important news of the last 24 hours. Bank of Japan revamps the monetary policy to rise inflation to 2%. Well, but if you've been following my videos, you already knew that Kuroda, already has that as its policy. I've been talking about 2%, 2%, 2%, 2% inflation. Bank of Japan has been singing that, all the time. Now, what exactly has happened? Um, the committee has approved money market operations that will increase the Bank of Japan's monetary base at an annual rate of 628 billion to 733 billion dollars. I mean, at the current rate. Now, basically, the Bank of Japan is literally doubling down on its money printing. Now, uh, this is a dangerous situation because just some time ago, we mentioned that the central banks had chosen not to have a currency war. But now uh, that is exactly what the situation might be headed towards. If yen's going to weaken so much, do you think that the other currencies will, want to not print any money? They might want to print money and weaken their currency to help the exporters. So, currency war might be on the cards. Okay, now another day, another merciless beating for the precious metals of gold and silver. Now, gold sank below 1,550. I'm going to pull up my gold chart. Remember, just some time ago, I had this particular drawing, and I said that this is exactly where I want to be buying gold. I expect gold to breach this level, the 1531 level, come down. The entire world thinks the gold's going to fall down, and at that time, I'd go ahead and buy gold. If gold is acting exactly the way I expect it to. Nothing to worry out there. Um, and I am yet longer term gold bullish, but not right now. Okay, US jobs. Yesterday I told you about the ADP number were disappointing. For the second day in a row, the key measure of the job market has confounded the expert consensus. Basically, it was a horrible a job number. And basically, the Labor Department's weekly report, for the first time, jobless claims it surged to 385,000, the highest this year, and once again worse than the most pessimistic guesses. So, what does this mean for us in the markets tomorrow? The market has already started pricing in worse than expected non farm payroll number. If you recall last month, if you can go ahead and look at what I said about the non-farm payroll. The non-farm payroll last month was that the market had already started pricing in a better than expected non-farm payroll. But this time it is absolutely different. In normal circumstances, what would we be doing? We would be selling the USD JPY from the European Open right up till the non-farm payroll. Will we be doing that this time? The answer is no. Why not? Because I just mentioned Bank of Japan revamps monetary policy to raise inflation to 2%, and Bank of Japan is doubling down on its money printing. So, since the yen is going to act crazy, I'm not going to be comfortable taking a USD JPY short position, and hence that a pre-news trade is not on the cards. Now, on other important news, we have Bank of England makes no change to the 375 billion pounds stimulus scheme. And the preview from tomorrow, I've already mentioned it that we will have the US non-farm payroll. Okay, the scenario that existed last month for the pre-news trade on US non-farm payroll is no longer valid. So I'd want you to be aware of that. I do not have a working trade plan for the non-farm payroll. I'd like to just take it calm. And the Canadian IVPMI release also, which will be at 10 o'clock. I do not have a consistent trade plan for that. So, tomorrow will be an interesting watch and looking at the big fundamentals and where they are headed, but not a very trading kind of a day. Hope you enjoyed the presentation. I'd like to hear from you. Thank you and have a wonderful day.